Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a look here, of course, at Bitcoin. Some really important stuff you need to know regarding high block capital data, as well as some Bitcoin dominance, and of course, CME futures. We have some small gaps that might need to be filled. So if you're new to the channel, not a financial advisor, love to teach people trade, hope you can learn something here today. We're going to take a quick look at a few key factors here. So first things first, we're going to jump right into high block capital, kind of see what's going on there. We saw a lot of volume yesterday and the day prior. Today it's been slower. Obviously the day's kind of just starting, but for lack of better terms here, we don't have as much volume as we'd like. Okay, that's not always great, but open interest is up, which is positive. However, the price is kind of down. So when you have more open interest going up, price going down, as well as the fact that Bitcoin dominance is kind of hitting that plateau, we're going to start seeing some money coming away from Bitcoin and going into altcoins here soon. That's the common standard procedure. Good news is we have just as many bid as we do asks, and that's a good sign. That's kind of just implies that we're kind of at this neutral point right now where it could still go up. I would rather go up, of course, but I'm more interested to potentially short right now. Missed my short opportunity at 29.5 last night to 29, but I think we can find another one today, actually. That being said, this is a 7-day, 1 full week worth of trading. Let's go ahead and zoom in just a little bit here and see what the liquidation levels look like. We see the most amount of liquidations and or just open/close positions at 26,850. Okay, so those are still kind of cranking in there. Obviously that is from previous data, but for the most part, if we look at the more relevant recent data, we can see that we have the most amount of liquidations at about that 30,000 level. Okay, so that really just helps us imply or understand that there's a strong resistance at that zone, and that it's absolutely something that's worth noting. Furthermore, too, high block capital data, you can kind of see here more recently what's going on. We've got a lot of open interest at 29,200. Okay, so that could be shorts or longs. Let's go ahead and find out which that is and kind of understand, because it does show that the longs right now are underwater just by a little bit. They're underwater about $200. Same thing with net shorts. I would imagine they are pretty close. We got some shorts, some recent shorts opening at about 29.2 and also 29,000 even. So there is some interest here, thinking the price is going to go lower. That's kind of where my head is at, but we'll double check and find out here soon. Because again, we have this descending type of pattern. Of course, the price cannot pass here, cannot pass go, cannot collect $200, and we're seeing the situation where it's essentially getting rejected at that level. Okay, so it's establishing lower highs and lower lows consistently. Keeps retesting this Fibonacci retracement level at 29,000. So if we do lose that, that will be the new potential resistance. You got to keep in mind there's a lot of volume at this area too, so it's providing somewhat of a support. We might want to wait a little while and see what happens here next. But it does look like a short would maybe be a little bit more viable, and a short down to 28.5 might be appropriate. It's hard to say specifically, but I'm leaning a little bit more towards that just based on everything else we can see. Let's talk about that too. In fact, let's go ahead and just jump right into CME futures here. And these are some gaps that I noticed earlier, okay? Because again, remember we talked about this one previously from 28,000 to 28.4. That got filled with this wick down here. In fact, that's what happened when we saw that really ugly candlestick from a couple of days ago, that a 10% 1 hour candlestick. Yeah, this is obnoxious, but that filled that CME gap. What do you know? Coincidentally, the price continued to shoot up that same day, and we got a couple of gaps here as well. These are really tiny. They don't always have to get filled, but it's really common for that to occur. We can see here recently this most recent tiny gap as well got filled here just a moment ago, roughly 2 hours ago. Okay, so generally speaking, we're in a position right now where the price action looks like it wants to gravitate a little bit more towards that 20,500 mark, and that to me seems more probable. Taking a look at the Bitcoin dominance too, and I sent out a tweet last night on Twitter, of course, just kind of touching on this here. It's a little easier to see on the weekly, but if you can kind of see here, we got a pretty significant shelf. Okay, so every time the price comes up to this level, it gets rejected. Now we've retested it twice in the last 2 weeks, so that is something. But the likelihood of the price action getting rejected at 49% is pretty high. It's like a commonplace for the price to turn itself around. And when it does so, altcoin starts to surge, right? So what's going to happen is when Bitcoin dominance reaches its peak, which is pretty much there, the price of Bitcoin will come down. Profits come from Bitcoin and go into altcoins. That kind of spurs, I wouldn't say necessarily alt season. We're not necessarily there yet, but we're kind of on the edge of it, because if Ethereum will start taking off or maintain its price point when Bitcoin drops, then we know that we're in that position. In fact, we saw that recently too when things kind of started to spur off there a little bit, but for right now, that's kind of where we're at there. So, okay. So anyways, that's kind of the big picture there. Let's go ahead and quickly take a look at the monthly and see where we're at. We're still closing tentatively above. In fact, let's see. Yeah, we're tentatively above. So I wouldn't be surprised if, because this happens usually always the last couple of days of the trading for the month, you'll see like aggressive direction, positions where it pushes the price in different directions to get above or below certain levels. I wouldn't be surprised if we see the price push down to get us below that level. So I wouldn't be surprised at all. But we are on the verge of a MACD convergence as well on the monthly. That'd be awesome, even if we were to close below 50 on the RSI on the monthly. Okay, so keep that in mind. We also are back up above, just, that does look fairly indicative. We're going to close above 24,300, or just say round number 25,000 for that 50-day SMA. So those are all positive signs. We haven't closed above that in a while. I mean, obviously last month we did, but it was the first month. Getting a second month closure above the 50 is a really big deal. Okay, so I think we're still more bullish than bearish in the sense of things where the price action should be close to its bottom. To me, 25,000 seems like the lowest point in which we should go, or 25,300 to be precise. And you can see that reflected here. This is that 25,300 mark. Okay, so I think that would be the worst case scenario if the price were to come back down that far. We could very well be at the bottom right now too, though. You never truly know, but I do think that we're in pretty good shape. Let's talk about that. Let's go ahead and see here. So we're at 50 on the RSI. We're above 50 rather, of course, which is nice. Price could bounce off that level. We have a MACD convergence also on the horizon here too. So if you are going to short, I would short carefully and make sure they are short positions, if that makes any sense. Short in duration, not direction, right? So obviously, in that sense, make sure that you are careful, because there's some really positive stuff happening, kind of forming on the horizon. Now this could totally change. This could totally come up here and get rejected, and we could see a divergence completely. Like a confirmation of a divergence, basically like a double divergence, so to speak, when it bounces off the other direction. It doesn't always have to converge. That being said, if that were to be the case, then we'd have a situation where the price would continue lower. Okay, now we're not there yet, but it does look like we keep retesting that 29,000 mark, and it wants to break down. So to me, when we see those kind of things happening, it just seems a little bit more on the bearish side. But all things considered, we're looking pretty good here in the overall sense of things. MACD is potentially converging. We're above 50 on the RSI. The SMA, the 50-day SMA, is working as a pretty nice little trend line there. And I think overall, even if the price were to pull back, I think 27,000 would probably be the most immediate bottom based on the simple moving average kind of averaging itself out. Actually, it's probably closer to 28,000. 28,000 would be the most recent bottom, I would say, here for this for Bitcoin. So daily is looking average. It's not terrible, not great. There's more positive than negative, of course. But on the same accord, this absolutely looks like it's having some difficulty and wants to break down. We will see here soon exactly what is going to occur. So on the 4 hour, we're above 50 on the RSI. That's positive. We do have a MACD divergence on the horizon. This to me tells me that we are probably going to break down a little bit further. Again, this is more of a swing trader's perspective. I've been swing trading for a very long time. I started day trading, of course, for many years with traditional markets, right? So I used to trade natural gas, crude oil, and those were futures, of course, and I had to wake up early, get in the market, and get out before the day is over. That was all fun. That's all well and good, but I do gravitate a little bit more towards swing trading, and I can tell you that the MACD divergence on the 4 hour is a much more impactful indicator that you can use to kind of shift that momentum, because you can see we've got this large uptrend and it needs to be corrected a little bit, and it would make sense that the correction would come down to 28.5. It's kind of what I'm expecting. Again, I could be wrong. I've been wrong in the past. My community members know that. But for the most part, I do gravitate a little bit more towards being safe and conservative, and so far we're seeing some positive macro data, but we're also seeing some less positive as we go lower on the time frames, right? And the lower you go on the time frames, the more likely it is to translate to those larger time frames, right? So the 4 hour kind of looking slightly bearish, a little bit more bearish, then we're in a position right now where we got to be careful. Okay. That being said, the price could very well come down here. Again, we got the 200-day SMA on the 4 hour, averaging itself at 28.6. So if I'm going to have a take profit target, it's going to probably be at 28.7. Okay, so 29 to 28.7, that'd be roughly what I would be planning to do if I were to take a short right now. Furthermore, too, on the hourly, let's go ahead and see here. This is where you can kind of see a little bit more definitively. We got the lower highs and lower lows. That's pretty consistent. We're below all moving averages there. Let's take a quick look at the cloud here. I'm kind of curious. Conversion line did drop below the baseline. The lagging span is soon to be free and clear of the price action. The only hitch or hurdle we have here is that we're above the cloud. So typically it's best not to trade into the cloud because it works as a support level. As you can see here, it's worked as a support previously. So again, it may be advantageous to consider waiting a little bit longer to take a short, but on the same accord, there's a lot of reasons why I feel like a short might be appropriate in the relative near future. Keep this in mind, we're at an 8 on TD sequential to the downside. Okay, so we're probably reaching our max point here. The price shouldn't go much lower, but as you can kind of tell in the past, when there's momentum, it doesn't really matter. The price is going to keep going in whichever direction it wants to, regardless of how overextended it can be. Okay, so there's no guarantees on that, but the fact that we're at an 8 right now, and we're kind of traveling above the cloud, is all the more reason to not quite take a short position just yet, even though I really absolutely want to, and I would like to, because of what I see. We want to wait for confirmation, right? So to me, a confirming factor would be a MACD divergence in the 4 hour. Obviously, we're on the horizon there, right? So another couple of hours, or sorry, another 2 or 3 more candlesticks, what, 8 to 12 hours, we'll know full well if that's going to diverge or not. The hourly, if we can break below the cloud, which would put us at a closure about 28.6, then that would be another consideration for a short. But once again, there could be profits to be taken between now and then too. So there's a lot of different schools of thought here, but I realistically think that we're in a position right now where a short trade held for a brief period of time would be more appropriate going into the weekend than it would be to take a long position just based on how we keep rejecting up here and we keep establishing lower highs on the larger time frames. That concurrent with the Bitcoin dominance coming down or getting rejected off that 49% mark, I think that's a pretty definitive answer here and telling us that more volume is going to be coming away from Bitcoin. Open interest is down and the price should continue lower. Again, how much lower will it go? Well, to me, I think 28.5 would be the most immediate stopping point. 28.6 or 28.7, maybe there's that simple moving average on the 4 hour that kind of is holding the price potentially in place as well. A lot of little things that could factor in, but it just makes a lot more sense for the price to come down than it would be to go up. Okay, so hopefully that was helpful for you and I described that correctly. But if you want to become a better trader, again, cryptocash.tech is a site, link down below, of course. Help us grow our Twitter community as well. We do have Twitter, which is a very, very nice option here, and tons of awesome, relevant, important, fundamental, and technical data. So be sure to come over there and check that out and just help us become better traders together, right? We all got to learn and grow together, and it's really important because trading can be a very solo sport, if you will, if you want to call it a sport, right? It can be something that's very, I don't know, kind of, it's very alone, right? And if you were with other people trading and you're learning together, like I got here because I learned from so many other people, right? So keep that in mind. You're not going to be in a position where you're just like amazing and phenomenal without any help. It takes time. So hopefully, you can learn and grow with us. Cryptocash.tech is a site. Look forward to working with you. By the way, we're having day trades come in the community here within the next week. They're looking very good, very solid. We just kind of got to work out the details with Cornix to make sure those are fully automated for you. That's available as well to our current community members and, of course, future as well. Thanks again for joining me. Hope you have a great rest of your day. Thank you so much.